we go.
Welcome, Daniel.
Thank you, Caspar.
Yeah, Lemonade, as mentioned, Lemonade started yesterday with an insurance product in Germany. We have old traditional insurance companies here. So what do you expect from the German market?
Sure. So good afternoon to everyone here. It's a source of great pride and excitement that we launched in Germany. In fact, Germany is our first country outside of the United States to be launching in. So as of yesterday, anybody can go to lemonade.com, it's a little plug, and buy some insurance for yourselves. I hope you all do. And what we're hoping to see is a replication of what we saw in America. So we imagine that things start somewhat slow, it takes time to get going, but then things grow exponentially. And what we've seen in America, where we've been live 2.5 years only, has been very, very rapid growth over the course of that time. And we're hoping that both in Germany and in Europe more broadly, the same basic core value propositions that has resonated with consumers in America, I think is universal. It's about no hassle, alignment of interests, instant everything, getting paid in seconds, having a charitable component. These basic building blocks of Lemonade, I think, appeal to people in San Francisco, and they appeal to people in New York, and they'll appeal to people in Berlin as well, because they are universal.
But there also are some specialties in each market. So, for example, the brand awareness in the US, I think it's higher than in Germany, and the Germans also compare a lot of the price for the insurance products. So do you also specialize the product a little bit on the German market?
Only a little bit. So we are coming to Germany with an assumption or with a thesis that the same basic building blocks are, as I say, international and universal. And you see this elsewhere. In insurance, companies that operate in Germany don't operate in America, and vice versa. So the big brands that you're familiar with here, and Allianz or an AXA or elsewhere in Europe, Generali, none of them sell to consumers in America. And the big American brands, State Farm, Allstate, Farmers, Geico, none of them sell here. So insurance stops at the water's edge. The Atlantic is unbridgeable. But of course, a lot of other brands, technology brands, manage to go internationally very quickly. So consumers here and in Tokyo and in London and in the United States will listen to music on Spotify and will arrange their vacations on Airbnb, and oftentimes will travel on Uber and watch TV on Netflix. So I think if you get the consumer value proposition right for the young consumer of today, really, water should not be an unbridgeable gap. And our thesis is that with Lemonade, there are some changes, there are some regulatory changes, but the common denominator is greater than that which separates us. And that therefore the same basic experience is something that can have universal appeal. Time will tell. We've been in market 1 day. So far, so good.
Can you give us some numbers for the first day?
I think not, but so far so good, we'll see. And as I say, our expectation both in Germany as it was in New York is to take the first few months to iron out the kinks, to make sure that everything works perfectly, that our response to customers is perfect. In the United States, 2 years after our launch now, if you look on the Apple App Store, you'll see 15,000 reviews of Lemonade. And we have a 5-star rating almost always. It's a 4.99 or 4.9 something average. If you Google Lemonade insurance reviews in the United States, you'll see that we have outranked 270 insurance companies there in terms of user experience. And I say this because the focus has to be the consumer. And not growth. The focus has to be the consumer. If you get that right, that leads to growth, not the other way around. So we'll do the same thing in Germany. We're going to spend a lot of time making sure that the messaging is right, that people understand, fixing things that we thought we'd got right but hadn't quite, and then the growth comes from that. So we're not setting any aggressive goals in terms of growth, not for the first day and not for the first year. Our growth is qualitative. Are we delighting consumers or not?
So how long does this phase take to?
It's indefinite. I mean that quite literally. The consumer.
But I mean the time when you put on the fuel and scale also in Germany.
When we see that consumers are responding well. So it's a feedback loop between us and our customers. We see what works well. We see what the reviews look like. We see what challenges or questions or complaints come in. And as we see that we're iterating through those, then we can start scaling much more quickly. In America, it took us about 3 months before we felt like this is something that we're comfortable with. But we didn't set that as a timeline. That was a result rather than a target. So we'll see.
Okay. So in your pitch, there are some fancy words like artificial intelligence, behavioral economics. So for the guys who don't know your product, what does it really mean?
Sure, thank you. So Lemonade is a new kind of insurance company, and we are an insurance carrier. In other words, we're not a digital facade in front of a 100 or 200-year-old traditional insurance carrier. We went in the US to New York and we established an insurance carrier, and we've just done the same thing in Europe. So we're writing on our own paper in the insurance speak, and that means that we own the whole stack. We're vertically integrated and we control every element from the regulation to the policy language to the application, and every piece of code was written from scratch, purpose-built in order to deliver the experience that you just saw in that video. And we think of it as being built on 2 pillars. Artificial intelligence is one, but I'll actually start from the other one, which is behavioral economics or game theory. Both myself and my co-founder are newcomers to insurance. 4 years in, we have some familiarity with insurance, but both of us came from 20 years as serial entrepreneurs in other areas of technology. And when we first founded Lemonade, we figured we should learn something about insurance, but we stopped ourselves. We locked ourselves in a WeWork kind of shared space environment, and we spent 2 months trying to think from scratch. Why do we not like insurance? Why do we not trust insurance? And think about how we would architect insurance differently. And insurance has been, there's the record going back at least till the 1300s of people complaining about insurance, that insurance companies are great at taking your money, but they're not so good at paying you when the day comes. If you go to the Urban Dictionary, which is a crowdsourced dictionary, and you type in the word insurance, the #1 definition voted by the crowd for 11 years in a row is a promise to pay later that is never fulfilled. So we wanted to ask ourselves the question, why do people, insurance is a financial necessity, it's a social good, it's about a community of people pooling resources to help their weakest members in an hour of need. Why is it that we all hate insurance and distrust insurance? That really fascinated us. And one of our founding team members is Professor Dan Ariely, who's one of the most preeminent behavioral economists, and he spent 10 years researching areas related to this. And ultimately, what we decided is that if I have to simplify things, the root cause problem in insurance is a business model that creates a conflict between me and my customer. So you make a claim for 1,000 euros. If I pay your claim, I'm 1,000 poorer, you're 1,000 richer. And if I deny your claim, it's the other way around. We're fighting over the same coin. And how do you create a lovable, trusting, and trustworthy brand on top of a business model that at its core, there's a conflict between the company and its customers? So we started off by changing the business model, and that's why we established a new insurance company, because we felt that technology doesn't solve this. And what we said is we're going to take a flat fee. You pay us your premiums, you pay us 100 euros a year, we're going to take 25% of that. And we created a financial architecture whereby we never take more and we never take less, no matter how many claims. And what we did is we purchased some reinsurance, so if there's too many claims come in, the reinsurers pick up the bill for that. But if it's a good year and there's money left over, we don't keep it, we give it to charity, and we ask you, our customer, to choose the charity. And what that does is it changes things entirely. Instead of it being a bilateral relationship between me and you and we're in conflict, it's now a trilateral relationship, because there's a local, your church, or the soup kitchen, or the International Red Cross, whatever charity you chose is in the room with us. And when you're making a claim, you might think twice before embellishing your claim, because you're not sticking it to the nameless, faceless behemoth. You'll be hurting the charity that you care about. And I no longer have an incentive to deny your claim, because I'm not going to keep that money anyway. Even if there's money left over at the end of the year, it's not mine, it's theirs. And so we worked very hard on changing the entire basic dynamic of insurance to try and create an insurance where I'm aligned with you. Now, once I get there, then technology can do some cool stuff, because I don't want to throw paperwork at you. I don't want to make it hard for you. I want to make it easy and cheap and seamless, because I only grow if you're delighted, as opposed to making money by disappointing you.
But isn't it hard to explain this principle to customers?
Yes. So there are simplified versions. When I have 20 minutes with somebody like yourself, I can explain it in detail. But you can look on the app and you can get a sense of that. But I will tell you that we found a hunger for a different approach to insurance. And customers, even if they can't articulate it fully, they feel conflicted with their insurance company. And when they go through the process and they end up having a charity that they choose for the give back, or when the AI pays their claim in 3 seconds because we've used technology to get rid of all the crap of insurance and replace it with something instantaneous and delightful, that changes everything. And they understand it enough that we see some interesting behaviors emerging. So for example, on a pretty regular basis, customers contact us to return money that we paid them. Now, this is unheard of in insurance. They'll make a claim because their laptop got stolen. We pay it to them. Sometimes in 3, 4, 5 seconds, boom, money's in your bank account. 3 days later, we get an email, hey, thank you so much for paying my claim. My girlfriend found my laptop. It was under the sofa. So sorry. How do I return the money? So we do start seeing that the basic things, the basic building blocks of our business model do get across, and people do understand that this is something different. I like to say that people always live up to your lowest expectations. If I treat you with suspicion, you'll return the favor. If I treat you with respect, you'll return that favor. And if we can create an architecture where when you game theory it, the incentive structures don't lead me to mistrust you, not because I'm a better person than the next insurance guy, I'm not, but because the game that we have designed leads to different results and different behaviors, then that filters through and consumers get it.
So on the internet, there are 2 types of reviews. Many people like you, as you said, but there are also some people who are very dissatisfied on the other end of the scale. So what is the problem with these guys?
What is the problem with these guys?
Or
No, I get the question. But I like the way you formulated it. The nice thing is that the negative reviews are really outnumbered 10 to 1 or more. So if you look at review sites in general of any product in the world, you're really looking at the ratio. You're looking at a net promoter score. On aggregate, when you look at customers, what are they saying about you? We have a net promoter score of above 70. And insurance is usually in the low teens. So what it means that we're doing something right on aggregate. 70 is considered world-class. Apple is 70. Some of the best brands in the world are at 70. So we monitor these things very, very, very closely. Every customer interaction, we track the level of satisfaction. But there will always be some outliers. And this is a good opportunity to talk about one particular thing. At the end of the day, an insurance contract is exactly that. It's a legal document. It's a contract. And none of us can be bothered to read the insurance contract. We buy insurance because somebody told us to, and then we expect it to be a magic thing that will cover everything in the world, and it doesn't. For that price, you get this much coverage, and this isn't covered. And we do our best in the app, you saw before in the video, to make it very clear and simple icons and explain it as best we can, and some people pay attention to that, and some people don't, and then they'll say, oh, I thought it was covered, or things like that. Now, in that situation where we say, so sorry, not covered, it's not because we're going to keep that money. It's a very different dialogue. It's, hey, listen, that's money that's going to a charity of your choosing, and we're guardians of an ecosystem, but please know that even though it's not covered by a policy, we're not enriching ourselves as a result of that.
But wasn't it a mistake of communication?
Yes.
Yeah.
This is where I was getting to. You're absolutely right. What we found is that we changed the business model, we changed the technology, we changed the user interaction, we got rid of brokers and replaced them with bots, and we did a lot of changes. But the basic underlying policy looked like it was written in the Middle Ages. And actually, something we're very proud of in our launch in Germany, we changed that. So about a year ago, we launched something called Policy 2.0. And what we said is we've got this ugly policy, which is an industry standard policy, which is how we started. But I'm actually a recovering lawyer. I've been clean for 20 years, but I used to be a lawyer. And I couldn't understand our own policy. I was getting stuff wrong in our own policy. And I'm a native English speaker, but this was medieval words that just don't make any sense. And then even if you can understand the legalistic and you understand the words, the exceptions ran 6 layers deep. This is covered, except for this, except 6 sub-clauses of exceptions. And we said, we've got to do something about this. And we rewrote the policy. We reduced its size by 90%, and we formatted it like a blog post in contemporary language. And then we put it up on GitHub. And we said we're going to crowdsource and open source it. Any member of the public can come inside and make suggested changes, like you can do on Wikipedia. And any of our competitors may use this product. Now, in the US, we're still going through the regulatory framework of getting that implemented. But here in Germany, we were starting from scratch. So we actually launched yesterday using Policy 2.0. And if you go to our webpage, right at the top, it says Policy 2.0, click on it, and you'll be able to read it. And it's readable, and hopefully that goes a long way towards resolving what otherwise is a feeling of people feeling cheated. Oh, I couldn't understand what I was buying. It was too complex. The old policy took an hour and a quarter to read. So there were structural challenges. We're trying to tackle them one at a time.
Mm-hmm. Okay. So with your different business model, isn't it harder to earn money? So how long does it take to have a profitable customer?
So I'm going to challenge your assumption there. I think it's easier to earn money, but you are right that we are capping our upside. That's absolutely true. We're saying we're going to take 25%, and we have to cover all of our costs of that 25%, and even if it's a good year, we're not going to keep that money. So we are capping it. But the most expensive problems in insurance are around trust. They're around the fact that you don't trust your insurance company, they don't trust you. When you make a claim, huge costs just in processing your claim because you might be cheating me and I don't trust you and I throw it back. In the US, certainly, and I think it's similar in Germany, between 11 and 13% of every dollar that you pay them doesn't go towards paying claim, it goes to the bureaucracy of managing claims. Hugely expensive. Fraud, hugely expensive. Crazy amounts of fraud in the insurance space. So we asked ourselves the question, do we, by capping our upside, and by the way, we're a certified B Corp, we're actually incorporated as a different kind of legal entity. It's called a public benefit corporation, which means we're for profit, but not just for profit. We do think about the greater good. And we said to ourselves, and we managed to convince our investors, that by aligning interests and giving leftover money to charity, that doesn't turn us into a non-profit. That's the smart way to profit maximization. That is enlightened self-interest. And I think today, consumers in general, I think this will be more and more true as things go along. People want to align with brands that they trust and whose values align with their own. And that is insurance's most expensive problem. It translates into low retention rates, it translates into high cost of acquisition, it translates into fraud. If we can do something towards addressing those, we'll get repaid for all of our kindness in our bottom line as well.
Thank you. So do you have any questions for Daniel? Do we have a microphone?
Hi, congratulations to your launch in Germany.
Thank you.
I wonder if you can compare maybe like regulation-wise, was it harder here in Germany to get everything ready? And did you have to find some partners? And if so, which ones are you working with?
Regulation is a real challenge everywhere, especially when you're establishing a new insurance company. If you just want to be a broker to a traditional insurance company, that's much easier, but that's not our model. And it's a tough competition to answer the question, where is tougher? New York State prides itself on being a very exacting regulator. It's one of the financial centers of the world. They don't cut corners. And we're regulated by the Dutch regulators. And of course, the German regulators have allowed us to passport into Germany as well. And I have to say, they are as precise and as exacting and as careful as are the American regulators. So the regulations are different, but in each case we found that the process is time-consuming, expensive, requires a great deal of dedication, and we're grateful for it. We actually don't resent it at all. I think that we found in each of these places the kinds of things that we had to go through made perfect sense. Insurance is a promise. You pay me now, don't worry, I'll pay you later. And I'm glad that there are regulators there that make sure that the people who are running it have clean records, that the company is funded so that it can do it, that it has the track record. All the things that they require of us are time-consuming, a headache, expensive, and entirely appropriate.
Did you have to find some partners here in
Oh,
Germany?
partners, sorry, yes, you did ask. So in our business model, the idea that we take a flat fee, we achieve that financial engineering, because that's not how insurance works, through two ballasts, if you like. One is easy, it's the give back. If there's money left over, give it back. That's easy. Although the regulators didn't love that either, but okay. The other one is, what happens if there's a bad year? How do we protect ourselves from that? And that's where reinsurance came in. And we do have a large network of reinsurance partners. These are not normally consumer-facing brands, but major companies like Munich Re, and in the US, Berkshire Hathaway, and major companies like that, but also some large insurance companies that have reinsurance departments. So in America, we work very closely with Allianz, who are also an investor in Lemonade, and our Germany launch was done in partnership with AXA, who are a reinsurance partner. So we're the customer facing, we write on our paper, we take the risk, but elements of the risk we have resold to AXA, who have been our partner in the German launch.
Some more questions, this.
Hi, one question. You said your primary focus is on the user experience and not onto growth. How does that go along with your investors that probably would want you to grow faster and quicker?
I think it's the only path to profitable growth. So I don't see those as living in tension one with the other. We have grown very fast. We've only been in market 2.5 years, and we compared, this isn't a fair comparison, but we compared it to some of the most successful technology companies and what their first 3 years looked like. And we've been growing faster than Apple or Microsoft or Amazon or Netflix or a bunch of other darlings of growth. So I don't think we've got a problem of growth. I think our growth is very, very healthy. But it's driven by customer delight and not the other way around. Anybody can sell insurance if you're willing to just throw enough money at it, because it's a captive audience, people have to buy insurance. To really affect that kind of change where consumers tweet about insurance, tell their friends about insurance, and it starts getting viral. And the brand, you said we've got a big brand in America today. We have a reasonably big brand in America today, but we are being outspent by the traditional insurance companies by a crazy amount. You know, the large insurance companies spend over $1 billion on marketing a year. We spend less. And I think the secret to that is being customer-centric, thinking about the user experience at every time, and only then growing as a result of that.
Perfect. Thank you very much, Daniel. So one last question.
Yeah, just one last question. I'm actually a house owner in LA, and I love the user experience. I am a Lemonade customer, so congrats on that.
Oh, wow, thank you for your business.
I was just wondering, I didn't get that. Is Germany actually the first outside market of the US? And why did you come to Germany? Why not? I mean, it sounds like you're English. Why not pick the UK?
It's a great question. Yes, Germany is our first market. We do have global aspirations, certainly pan-European to start with. And the two largest insurance markets in the world are Europe and America. But it is highly regular. I said earlier, the Atlantic seems to be an unbridgeable gap. Britain might have been a natural place to start. They're going through some challenges. Brexit, yeah. So we'll wait and see how that plays out at the moment. It's a wonderful thing about the regulation in Europe. Unlike America, America is made up of 51 separate regulators. Europe is actually much more unified, England or Britain accepted. There's 28 countries that once you get one license, you can sell into. So that made a lot of sense to get a continental license rather than a British license. But we do have aspirations to get to the UK as well. Thank you for your business.
Thank you very much for your time, Daniel.
Thank you, Caspar. Thank you all for your attention.